Okay, so she was asking what's my outlook for the stock market for the rest of this year. Um, here's my path or the theme that I'm really looking at very strongly, and it's pretty straightforward. Over the course of this year, the virus, gets under control to a large degree, much more so than it even is now. And not just here, but throughout the world. The vaccine is rolling out at an ever increasing rate in most places of the world, especially here in the US. It wasn't that long ago we were doing 2 million doses in a day. Now we're almost to 5 million doses in a day. So as that continues, that's going to allow um, people to get out of their home. One of the things we look at is called mobility data. And so mobility data tracks cell phones, worldwide. So the US, if you look at the mobility data, it's 23% less motion happening right now in the US than last February before, the lockdown started. So that means about a quarter of the population is still staying fairly stable in their place. And what that means is there's a huge amount of people that can still come out and start to spend and go to restaurants and go to hotels, go traveling and those types of things. The other part of this is the regulation side. So, for example, in California, we're not fully open until June 15th right now, but these are all going to come. Every state's going to fully open. We're going to be able to have concerts and go to movies and go out to eat and get on a cruise line and all those things. So what that does is that causes this monstrous amount of money going into these kind of what we call epicenter stocks. I believe that's going to continue to make the interest rates go up on these bonds. They went down pretty heavily yesterday, coming back up today again. But and when that happens, you're going to see growth stocks generally do poorly in a highly interest rate increasing environment, and I think value stocks are going to be the place to be, especially in these epicenter stocks. And what I just talked about with that RCD, that Invesco equal weight consumer discretionary ETF, I think those types of things are the place to be because I think we're going to have a very, very explosive economic growth. The Federal Reserve is predicting between 6 and 7% gross domestic product growth for 2021. That's a huge number for the U.S. So I think we're going to see some pretty amazing things. I do think that we're going to see some softness as inflation picks up if it picks up too fast. So we'll have to see how that plays out.